Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's May 1st. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. Man, there's so much going on right now. Earnings season in full bloom. And yes, I was surprised by those Google numbers. I'd be worried if I were you. Analyze that. I'll cover that on Frankly Speaking, get a lot of questions on it. And I know the protocol is to basically buy every large cap technology company, especially the FANGs that decline in value. Be careful with Google. I'll explain why on Frankly Speaking podcast. But in the middle of earnings season, lots of fun. We also had Ira Stark killing the Night King and saving the Seven Kingdoms. Holy cow, that episode of Game of Thrones was awesome this week. I love that show. Man, it was really cool. They were just showing it when it happened. Again, hopefully it's not a spoiler alert. You should have seen it by now, though. If you're a fan, you had to see it by now. If not, too bad for you. I'm going to spoil it, but it was really cool. They were showing like thousands of people watching it as soon as it happened, and it's like people going crazy. But yeah, all this stuff going. You got the NBA playoffs going on right now where... I don't know. When did the Eastern Conference become more exciting than the Western Conference? And Kawhi Leonard, Embiid, Simmons, Greek Freak, Kyrie Irving. Man, those Eastern Conference playoff games have been awesome thus far. While West Coast, Houston, Golden State, just like complaining to the refs, trying to draw fouls on every three-pointer they shoot. Kind of boring and ridiculous. But, and then you have the hockey playoffs. And my hockey fans out there always emailing me. And I'm a Rangers fan. But I could feel for the Islanders. I mean, when I was growing up, we hated each other. Ranger Islanders fans hated each other. And going to a Ranger game is like worse than Philadelphia Eagles. I mean, if you had a Ranger game and someone had an Islanders shirt, people just like throw sodas at the guy as he's walking around. It was really crazy when I was younger. But, Islanders have been kind of non-existent. And now they're almost favored to win after the first round sweep. But they lost 2 games after missing like 7 open net shots. It was just crazy. And then going into the next game. But, Carolina looks pretty good here. Bruins, Blue Jackets, that series is awesome. Avalanche, Sharks, you have San Jose, Dallas. Again, just so much going on. Throwing the fact that I'm heading to Vancouver after this podcast. Meet some investors for Curzio equity owners and a token offering. But, so much going on. And then in a couple of weeks, we have Mother's Day, which is on May 12th. So definitely don't forget that. It's probably worse than forgetting your anniversary because moms like to know they're appreciated, especially my daughter's mom, who really does a ton. I mean, probably works even harder than me and is incredible. But you know what? I want to share a story with you really quick. I love sharing personal stories with you, but I wanted to get your advice on this because I had an interesting conversation with my wife, and it was about getting cards for each other over the holidays, whether it's your birthday, your anniversary, whatever, Mother's Day, Father's Day. But I never knew this about her. I don't know why I never knew this, but my wife told me that she likes to buy cards in bulk. So she'll go to the store and buy them at the same time. So it's like, hey, let me get 5 anniversary cards, 5 birthday cards, cards for all the birthdays and stuff like that. And I'm not known as a sensitive guy. Maybe I'm a little bit sensitive sometimes. But I thought the fact that she buys cards in bulk was kind of wrong. I mean, when I had this conversation with her, she thought I was coming out of left field. Maybe we just switched roles. I have no idea. Because for me, when you're buying your spouse a car, it's personal. Especially when you're buying, not just your spouse or your mom. It's that personal card. And so much happens every single year. Especially when you're married, right? I mean, sometimes you have good years and sometimes you have rough years. That's marriage. And one of our rough years a couple of years ago when I had my back surgery, my wife found out she had breast cancer and, she's cancer-free now. We got surgery within a month of each other. It was a difficult year, and every single year is different because so much happens. And, it's, when you're married, it's almost like, hey, I can't believe we survived another year. I'm just kidding. But seriously, when I buy a card for my wife, it has a lot to do with, what happened over the past few months. So I buy a card and I look and I read them. And again, I feel like we're switching roles here a little bit. For example, last year, you guys know how busy I was into this year, right? I launched my security token offering. I was working, 15-hour days, literally 7 days a week, going crazy. And she was doing so much with the kids. She really held the fort down. She was very understanding. And, she knew I was trying to do something that really was never done before. So it required all my attention, and it was, steep learning curve. Combine that with operating a business, following markets every day, writing newsletters, hosting 2 podcasts. It was like a 6 to 8 month period where it's insane. So for me, in our anniversary, I would find a card that encapsulates what, we went through for the year and saying, hey, I really appreciate you being there for me, whatever. But my wife, buying a bunch of generic cards at the same time, and then, she'll write like, something nice in them. But still, I don't know how you would buy cards in advance. I mean, am I coming out of left field with this? But this was like a really debatable conversation. And not that it bothered me a ton, but, we had this conversation. She was viewing it like I was crazy. And for me, I thought, hey, come on. You can never tell your wife face-to-face that she's wrong. So I didn't want to say, you're totally wrong, or whatever. But it was a debate back and forth. But I'm curious to hear from you, because for the first time in over 10 years that I'm married, pretty close to 12 now, I think I'm right on something when it comes to my wife, at least in her view. I think I'm right on this one, but I want to hear from you guys. FrankCurzioResearch.com. And look, I love sharing my personal stories with you because it just shows that, one, it's therapy. It's great, guys. You should have your own podcast. It's great just to get everything out. But 2, look, I'm just a regular guy just like you guys. You listen to me behind the scenes. A lot of you haven't seen me. Maybe you saw me at conferences and stuff like that. But we all go through the same shit. We all have the same problems. We all, go back and forth with the kids and the wives and the husbands and stuff like that. And I just like to get real with you, especially in the opening, because I feel like so many of you guys are family. And plus, you guys have given me great advice when it comes to family and wife and marriage and stuff like that over the years. That's why I want to get your thoughts on it at FrankCurzioResearch.com. Now, brand new guest I'm interviewing today. His name is Matt Rizvi. And Matt is an amazing copywriter. He has his own company. He trains copywriters. It's a whole program, fantastic. And we recently did business together. He wrote a copy package for us that I truly believe is going to be a game changer for Curzio Research. Because, as you know, most of you have been listening to me for a while. I mean, we have some, first-time listeners to the podcast. A lot of you are subscribers to my services. But in order for us to grow, our job is to really get our name out there to people who are not familiar with our brand. And that's difficult, right? Because you got to start from scratch. You can't say, oh, well, you know who I am. I love when people say that. It's the worst thing in the world. But you have to prove yourself. And with this promotion and what we're doing, I'm very, very excited. And you should be excited too, guys, especially if you're an investor in our security token, you have an equity stake in the company. Because we got a couple of really good promotions coming out that I think is going to really, really build our business, which means what? Which means more revenue comes in, which means we hire more editors for you guys. We have more, the educational platform gets developed quickly. We have conferences, so all this is relevant. And, having Matt on here is, I wanted to give you a behind the scenes look at actually how important copywriting is to the financial newsletter business. And if you don't think it's important, think about all the promotions our competitors send out. Those are all copy packaged. All those things that you get 3, 4, 5, 10 times a day from, all the newsletters you sign up, whatever. We don't send them out that much, but you're going to realize why this is such an intricate part of the financial newsletter business and why copywriting should be a major part of a lot of businesses, especially when it comes to marketing. Matt's one of the best out there. He's fantastic. He's going to go through the behind the scenes. Again, I know you guys like when I have analysts on and stocks, but also what I love doing, and I want to get your feedback. This podcast is about you, not about me, is I want to show you the behind the scenes, give you that backstage pass to where it's not just, hey, we're giving you a stock pick. You go through the education, you go through, it's traveling. And that's what you're going to see with this promotion of how much research goes to every one of my recommendations, every one of the editors here, including Alkin. Like, we're in the field, we're interviewed. He's going to have interviews with some of the leading people in the industry, and not just the executives, but experts throughout the whole industry. And you're going to see, I'm trying out a product that, wait till you see when I try it out. It's kind of crazy. And you're going to see this whole entire thing. But a lot of that has to do with what's behind that, the whole copy package. That's how we market. I didn't have that when I worked for my dad. So our company was kind of small. We didn't know how to market ourselves. But other companies know how to market themselves tremendously. But sometimes they take shortcuts, which hurt subscribers, which we're going to go over. But I think this is going to be a pretty cool interview. I don't do it often. But just to give you a behind-the-scenes look of what we're doing, how we're building the company, and how important copywriting is, not just to the financial newsletter industry, but for anyone who owns their own business. It'll definitely give you good education. Also, I know there's a lot of copywriters listen to this podcast. I get emails from you all the time. Definitely give this a listen. It's going to be really cool. You're going to identify with a lot of stuff. And if you're a junior copywriter, it's definitely going to help you to learn more about Matt. So really fantastic interview coming up. Then, my educational segment, I'm going to share with the biggest secrets on how to generate a fortune from buying some of those hated stocks. So this is a lesson you're not going to see anyplace else. You're not going to find investment books. You're not going to hear you talk about podcasts. But it's a really great lesson on how to avoid the noise that you hear everywhere from analysts, from short sellers, from the media, and buy into names that sometimes have almost zero risk. But yet where you're buying these at these levels and hated companies are usually trading at their 52-week lows, if you're right, and I'm not talking about catching a falling knife here. That's why this segment's going to be very important. But if you're right, you're looking at 2x, 4x, 10x gains I've seen. If you're able to follow this certain set of rules, it's going to help you buy into those stocks that everybody hates, that nobody would touch, that you really just leave off your radar. And then, hey, a couple months later, you realize that stock's up 200%. And you're like, whoa, what just happened? No, we want to get into these things before they go up 200% because they're trading at super depressed valuations. Guys, please definitely give a listen to this segment. I won't disappoint, I promise. But before I get to that, the secret I'm going to share with you on how to spot the best companies, the best hated companies, exactly when to buy them. Let's get to my interview with first-time guest and my buddy and amazing copywriter, Matt Rizvi. Matt, thanks so much for coming on Wall Street Unplugged.
Frank, it's an absolute pleasure. Thanks for having me on.
Well, we've got to become really good buddies lately since you're doing a major project for us that we're very, very excited about, guys. It's going to launch soon. We're not going to talk too much about it, but Matt was a big part of that. But let's talk about your background because copywriting is such a big part of our business. But in reality, it should be a big part of so many different businesses. And before we get into exactly what you're doing for the newsletter industry, and I love to give people that backstage pass of what happens behind the scenes because all they see is a nice recommendation and, like how our business actually runs and why it has high margins and just incredibly scalable. But before we get to that part, tell me, what made you become a copywriter? It's a job that when I look at copywriting, I mean, a lot of times you're writing in another person's name, and it's very detailed. It's very difficult, but it requires like an amazing set of skills that I just think it's something that's rare in the industry. But what made you get into copywriting?
Yeah, Frank. So it's interesting because copywriting, no one really grows up. When you're a kid, you don't wake up one morning and be like, oh, I want to grow up to be a copywriter. But I always knew that I enjoyed writing. I was a decent writer when I was in school. I never knew what I wanted to really do with it. I always wanted to teach. I always loved just explaining things to people in really simple ways and seeing them get that aha moment. I've always really enjoyed coaching people. And so I always wanted to be a teacher. Originally, I thought I was going to be into history, and because I was a history major, that involved a lot of writing. So I've always enjoyed writing, but my dad was also really into internet marketing when I was a kid, and watching him start his own businesses taught me a lot about entrepreneurship, online marketing, direct response. And so I had this kind of base knowledge of marketing and direct response, and then combining that interest with my interest to write, copywriting ended up becoming a really good fit. And because my dad was really interested in starting businesses and entrepreneurial, I always saw that as what I wanted to do. And so when I was very young, I tried to connect myself with lots of mentors, people who could point me in the right direction of the best way to really start my own business and people who I could learn from. One of my earliest mentors, when I was at an entrepreneurship camp, I want to say I was maybe 21 years old, and I went there and he was like, if you want to start a business, the number one skill you got to learn that I would recommend is copywriting. And at the time I had heard of copywriting and I knew a little bit about it, but I didn't understand its importance. And I think most people who aren't in the industry or just don't really know what copywriting is, just can go under the radar for most folks. But it's, like you said, it's a critical part of so many businesses. And once I found out how valuable it is, and just like you mentioned, it requires a lot of combination of different skill sets, writing, psychology, ways you're talking about finance, understanding the markets and all that. So it's challenging, it's fun, and if you can do it well, you can make a very good living off of it. And so, yeah, once I found out that, it's kind of, a lot of people paint the picture of retirement or the freelance lifestyle. You get to work from home or, set your own hours and write from a little cabinet like Walden or something like that. And that's always appealed to me. But yeah, there's a lot to love about copywriting, but not a lot of people know about it.
Yeah, and guys, I want to share a story with you to bring everyone in here of how important copywriting is. When I grew up, I was working for my late dad. My late dad had some of the best track records I've ever seen outside of Peter Lynch. And I'm not saying that because it's my dad. His average returns over, I think it was a 19-year period, was over 19%, which was incredible. And we had maybe 7,000, 8,000 subscribers, and we charged not too much for the newsletter, maybe anywhere from $99 to $199 at the time. But nobody really knew we existed. And, we were a small shop. Then, going to the street and working with Kramer, and you look at street.com and you pull up their stock and you see the revenues that they generate, it's around $50 million a year they're generating in sales. When I went to Stansberry, I understood, it was like I didn't even understand the newsletter industry, to be honest with you, because the marketing behind it and the copy behind it, where almost every single editor had 10,000, some of them over 100,000 subscribers. I mean, we had a newsletter, my newsletter, which had 20,000 plus subscribers on the front end, and they canceled it because it wasn't that big. and when you have these copy packages, it's basically finding a way to market your products to identify with people, and that's what marketing is. You're not going to say, hey, this product is good. No, it's not good enough. How do we sell it? How do we change the marketing strategy? How do we get this into people's heads to understand this? And when I look at copy and how we generated, 6 million in sales in just 2 years, which may seem like a lot, when you look at some of the divisions, right, Matt, like Stansberry, if you look at, these guys within the Agora divisions, that they're generating $200 million plus annual in sales. Again, compared to the street and Jim Cramer, one of the most marketable people in the world, they really don't understand, the copy and the marketing angle like that. For me, it's just something that's so valuable that so many people don't know about, I feel like, and this could be used for different businesses. So I guess, why don't you take us through interacting with editors, how the whole process starts, and that's going to give you a behind the scenes look, because a lot of editors can be divas. I'm not going to ask you to name which ones are, and when you're marketing them and stuff like that, but go through the process and to start and finish, because we were just in a studio together a couple of weeks ago, and writing the whole package. The package is done. Now I'm taping it. We've done interviews and everything. It's going to be really amazing, guys. You're going to see it in a week from now. And take us through that whole entire process of how it works, how you talk to editors, and how you build this project and how you actually get it out. And the goal is, hey, now we're going to take promotion off of this. Talk us through it. I think it's very interesting, especially for my audience to understand.
Yeah, absolutely. I mean, naturally, people watching this are probably come into contact with a lot of the promotions that you either run for your business or Stansberry, a lot of the Agora companies. But yeah, people who see those online or get our promotions have no idea all the work and then time that goes into creating those promotions. So really, to start, I mean, the seed of the idea starts with just finding what we call a big idea. Okay, and so in our business, typically when we're creating these promotions, the goal is to tell a story, talk about what's happening in the markets or what's happening geopolitically and how that's going to affect people, and then connect that with the product and how this product is going to help you prepare for retirement or protect you from what's happening topically. So finding that one idea that's really going to resonate with people is step one, and it's one of the most important parts. Okay, so probably there's really just two big parts when it comes to creating big ideas and successful copy packages. Identifying the big idea is first and foremost, and then just executing that idea is obviously very important and very challenging too. But those are the two big things. Once you have the idea, that's a huge first step, but obviously executing is a really big challenge. But finding that idea, that can take a long time, honestly. When we're working copywriters, I'm sure most people don't expect, but copy packages can take months of prep and development to not just write and to produce and execute, but a lot of that work happens even before you've written a single word, finding that big idea. So for copywriters to know what's really going to resonate with the audience, especially in finance, you have to be reading all types of the Washington Post or the Wall Street Journal or New York Times, finding out what's really topical, what are people interested in, what are people clicking on, what's, for example, if the election's going on, right? So if the election's going on, everyone's going to be talking about the election. It's going to be really a big part of the news cycle. So lots of people are going to be clicking on stories about the election. So then the question becomes, what story is happening in the election that we can use and talk about, and what's that effect going to be on people's portfolios, and how can we connect that to our products and show how our products is going to help people even more because of what's happening. So finding that idea is a big challenge, and especially one of the biggest challenges is just the fact that often that big idea that's really saleable and really sexy right now is often the worst advice you can give people.
Exactly.
Unfortunately, and especially with the stock market and investing, if anything is all over the news, if it's really hyped up, chances are there's a lot of people have already invested in it, and it's not a great opportunity anymore. So as a copywriter, it's, and unfortunately not all copywriters take this approach where they actually care about making sure that they're recommending products that are good for their customers. So you have to find a big idea that's actually sexy, that's going to sell, that's going to grab people's attention. But then you have to find a way to connect that with a product that actually works and that's going to be good for people long term. A great example of this would be Bitcoin or cryptocurrency. Okay, so end of 2018, obviously that was all over the news cycle. December, we saw those huge gains go up in Bitcoin and all the cryptos. I loved it. I made a ton of money, but people were just, it was all over the news. Everyone was talking about it. And obviously after the bubble burst, if you bought in December, you would have lost your shirt. So while that topically was great for copywriters, if you wanted to write a package about investing in Bitcoin and published it in December 2018, you would have made a ton of money. But it would have been terrible for the people who would have invested in Bitcoin. So that ethically as a copywriter is a challenge. It's kind of like being a chef. You want your food to taste delicious, but you also want it to be healthy. And while it's really easy to make a chocolate cake with tons of fat and sugar, and it'll taste delicious, it's much, much harder to make a delicious, meal that's also healthy too. And so I have to kind of walk that line as a copywriter, finding these ideas that are really sexy, really intriguing, unique, but then tying them in with ideas that the editors can get behind that are actually really legitimate, safe, and valuable investment opportunities. So as we were talking about before, working with editors is a big challenge for that. And we want to find these ideas that people like and are interested in, but then I have to look through the editor's portfolio and find what are the big opportunities that they're seeing right now that they really believe in. Because I don't want to just come to an editor and say, hey, I really like a stock, you should promote it. I want to find something that they really believe in and then find that gap between, or that connection where I can bridge the big idea that's happening right now and connect it to what they're doing. One way we did this, again, with Bitcoin would be when Bitcoin was really popular, we would have ads and stuff like that would be like, don't buy Bitcoin before you read this, or, better than Bitcoin. So basically you're what we call newsjacking. You get to hijack the hype around Bitcoin, but not actually tell people to buy Bitcoin. So it allows us to use the zeitgeist and the really topical things that are going on, and then still connect that with the medicine and the good recommendations that we want to give people.
Yeah, and you covered a lot there. I mean, there's a lot of flaws in what you said too in the business model, right? Because these are the things that people need to worry about. And that's why I wanted to have you on, because a lot of times people say, well, we get all these promotions all the time, and you have to be very careful because one of the things you said is, sometimes copywriters bring idea to the analysts because they know they could sell it, right? So, which is bad, right? Because you really want your analyst recommending your stock, right? You don't want the copywriter, but the copywriter knows he could sell the crap out of it, which is good for the publisher. It's good for everybody except the people who except, mom and pop investors who are buying this. You talk about, topics are important where, in 2013, I believe, we came out with a marijuana promo, and it was just right after, Colorado was the first state to prove it, for legalization for just, recreational use. Washington quickly followed. Nobody cared. And we didn't generate any revenue. The promo bombed. You look today, you see Money Map's doing, banner ads every place, and they're making a lot of money. But, it gets to the point where sometimes – these things sell, but do you want to buy Canopy? Do you want to buy a lot of these marijuana companies? I mean, it's kind of like a cyclical industry depending on when the election is, right? 'Cause you're going to see some states approve it, which is positive, and after that, a lot of these things come down. But you're getting into trends at the top, and the flaw in our business, just those alone, but you're looking at companies that focus on profits only. And I understand profits are very important. We have a company, I have investors. I can't say, well, we don't care about profits. Of course we care about profits, but at what expense? Do I bury my investors and get out a copy package at the top of a cycle that I know is going to do well, but I also, in terms of sales, we'll sell the shit out of it. But we're going to talk about a trend that, deep down, I know you shouldn't really be investing in. And sometimes we see that out there where people are just like, hey, I know I'm going to generate money off this. The editor makes money, the publisher makes money. And unfortunately, the advice that they get, they destroy a lot of these investors because they're investing at the top of the cycle. This is why I like working with you, because we've come up with an idea that is original. We've come up with an idea that makes sense. It's a high growth company that very few people heard of, and more important, there's just a feel good story to it that I love. It happened to be very personal to me, where what we're doing in the device I'm talking about is actually going to save lives, tons of lives. And how is it working with something like that? Because it could result, Matt, in you creating packages where all right, you might not generate as much money, but you will do well and generate, but compared to writing about the top trends where, like you said, that maybe, these things are pretty top heavy. And it's just, the Bitcoin example you gave is, people got wrecked and there was a lot of promotions that came out right at the top of that market.
Sure. So Frank, I'll quote Spider-Man for a moment, with great power comes great responsibility. And I think that goes especially with copywriters. We have this power to be able to persuade people and convince them to buy things. And so we have I feel internal responsibility to make sure that the things that I am telling are legitimate, the claims I am making are true, and that these are really going to help people. I mean, that's just my own moral quandary about it. But honestly, even, without the virtue signaling, even if you don't care about morals at all, it's the smart decision to be, aligned with your subscribers' best interest, because that's going to be in the best long-term interest of your business. When we were in Baltimore, we were talking about just a saying that's just too pervasive in our business, and it really just makes me sick to my stomach to hear it. And that expression was just, the track record doesn't matter. And when we mentioned that, just there's so many newsletter editors and just in the business who basically, because copywriting is so critical to this industry, if you have good copy, then people think, it doesn't matter if you can recommend good stuff. You can still sell newsletters, even if you're a terrible stock analyst. And I hate that mentality, because the thing is, when people do end up signing up for your newsletter and they see the track record, once they see the track record and they see how bad the stock picks are, they're going to cancel. And so the long-term success of info publishing businesses like ours are highly dependent on recurring revenue. We want people to stick around long term, and they're not going to do that if they're getting burned by just hypey stocks with no real fundamentals to them. So really, the churn, we compare businesses across the industry. Some businesses have much higher churn than others in terms of customers. They'll bring on a customer, and maybe they'll only retain that customer for less than a year. Whereas some businesses, like yours is one of them, you have customers who've been with you for years and years, even over decades, right? So building relationships like that are so much more valuable than the quick churn of, sure, you may get a lot more scale early on with your advertising. Sure, you may be able to grow the list tremendously. Maybe you add 100,000 names in a year. But if 70,000 names end up unsubscribing and canceling, then you're just on a treadmill. So the real long-term goal is to build quality relationships, build positive goodwill with your customers. And I mean, this is a investing podcast. We all know that, goodwill, that shows up on the balance sheet, right? That builds value in your business to create that goodwill with customers. And I think you've done that tremendously in just your brand and your podcast. So, I know it's easy to think that, you're going to sacrifice money by making the moral, the good choice. But I don't see that at all.
Now, and I want to bring up this point too, because for me, I've been researching stocks for over 25 years. I love what I do. Obviously I have my own company, Curzio Research, but I love teaching people. And it's not that I'm some kind of genius, but over 25 years, I've made lots of mistakes. And I like to help people avoid those mistakes and limit your losses and put stops and why it's so important. And it's more than just recommending a stock, but actually teaching these people, because I just feel like, when you teach them, that there's more of a bond there as well, because it shows that you care. And you do. I mean, I'm doing a free podcast for 10 years for free, which resulted in me starting this company. It was definitely worth it, and we're doing, pretty good in terms of, generating sales. But For you, you're in the same position when it comes to copywriting. I mean, you're an experienced copywriter, and now you've started your own company. And talk a little bit about that, because we do have a lot of copywriters that email all the time. And, I'm sure they listen to this right now. But talk about, what you're doing, because it's kind of like what I'm doing, except it's on the copywriting side.
Yeah. Being, like I mentioned, I started off as a copywriter, and I got into copywriting because I really wanted to start my own business. I always enjoyed teaching. And after I really got a lot of that experience learning at Agora and Stansberry, and that, as you mentioned, that company has just some of the best copywriters in the world, learning from them, I felt like, what's the value that I can bring to the table? How can I, what's the unique perspective? What's the edge I can help teach people about? And so I was racking my brain for a long time. At first I wanted to get into finance, but I realized just, the experience I had with copywriting and my background and just my passion for it, it seemed like a really good fit. And I enjoy writing, I enjoy publishing, and it's cool to work with guys like you and be a ghostwriter and to do that kind of stuff. But it's also a lot of fun for me to write my own voice and to work with people one-on-one, and I write a daily email, and I have a weekly coaching call. And it's just a blast, creating that content. I'm sure you love it, doing this podcast every week. It's just a cool opportunity, and it's not like a major revenue driver for me, but honestly, I just do it because it's a lot of fun. I like meeting the people. It grows my network. I'm engaged with copywriters all the time who are working on different projects, and because I'm giving them feedback, I'm able to I'm very curious, so it fills that gap for me, so I don't get bored. They're constantly giving me all these different ideas, and I get to bounce them off them, so it's a lot of fun. But absolutely, I run into the exact same problems and challenges growing my business, just like any direct response info business. So I have to build my list, find people who are interested in copywriting, which is actually much more challenging, I think, than finance, because I think there's a lot more investors and people who are just fake up, like, oh, I want to be a copywriter. So my list is much smaller than if it was 20K, but no, I got a good core group of guys who are really excited, want to, enjoy writing, and want to be able to have that kind of freedom and develop a skill that can provide income for them for a very long time, and be able to, have the freedom to work from anywhere or set their own hours and pick their own clients. So yeah, it's cool that I'm able to share things that copywriting has given to my life and share that with other people.
Yeah, and for me, I just want to give everyone the background of everything. Sometimes they're like, "Well, Frank, you're advertising." We don't advertise nearly as much as our competitors. We're sending out promotions all the time. But there's times where we do. We have to promote. We have to generate money. We're very selective. When we find a good idea, we do it. But even explain, for anyone out there, it's looking to become a copywriter, the amount of money, especially in the financial newsletter industry, where we've seen companies within different divisions generate $200 million plus in revenue annually. Some of these packages are 7, even 8 figures, which, copywriters get a percentage of. I guess talk a little bit about on that end, because, you have junior copywriters coming along and you're teaching them, but when you really find the right idea and you're really committed to this, this is a very high demand job that, people would love to get great copywriters at their shop. I just feel like it's a job that too many people don't talk about. Yet, if you're really committed, it's not easy. But if you are and you become really good at it, you can make a lot of money, can't you?
Yeah, absolutely, Frank. And I think that's definitely one thing that attracts a lot of people to copywriting. And I think that's something that attracts people initially. They think that, oh, it's going to be a lot of money, and it's true. I think a lot of people want to be writers. They have that dream of the writer's lifestyle. And I've worked a long time to achieve that, but it doesn't happen quickly, and it's a real challenge with copywriting because, like we mentioned, it's a combination of lots of different skills. So you have to be a really good writer. You have to understand psychology. You also have to understand the product and the market that you're talking about, whether it's finance, whether it's health, whether it's internet marketing, whatever your niche is. You have to become an expert in that field, in addition to having the skill set to write, in addition to understanding sales and psychology and persuasion. So it takes a long time to learn, and a lot of people think that. So I'll talk about the big money in a minute. Don't worry, there's a lot of big money, but I want people to know that becoming a copywriter, it's not like you start and you're gonna make $1 million overnight. When I first started and when I became a copywriter at Stansberry, Mike Palmer, who was copy chief there, he's a legend in the business. He told all of us that You come in, you work in-house, you become junior, you learn from us, you work 2 to 3 years here, and then you're never going to have to worry about finding clients again. And when he said that, I was really skeptical, but he was right 100%. You know, since leaving Stansberry, just that experience being inside Agora as a copywriter allowed me to easily grow my network and just have clients on tap. But as you're mentioning, because Agora, the scale at 7-8-figure promotions, and the real attraction being a copywriter is unlike most writing professions where if you're just a freelancer writing blog posts or something like that, you'll get a base fee. Maybe you'll get a couple $100 or something for writing an ebook or whatever. But the great thing about copywriting is that you get to own the copy. And because of that, you get to, a lot of times you get to negotiate royalties on the packages that you write. So I've known copywriters who've written packages that have earned them individually, 7 figures. So, I mean, at Agora, at least, it's pretty, if you're not making 6 figures as a copywriter and you're working at Agora, then you're doing something wrong. And that's, it's really attractive. There's a lot of upside opportunity to copywriting, and the fact that you earn royalties on it, you can just build this pipeline of copy projects. And if you have a good promo, those things can run year after year after year. So it's just like being writing a hit song. They keep playing those songs on the radio and you get a royalty every time. Same thing happens with promos. So that's definitely one of the coolest parts about being a copywriter is once you start kind of building up your pipeline of projects you've created, and if they're good, they keep going for a long time, you can have this huge pipeline of passive income just sending you royalty checks.
All right, so we got about 3 minutes left. What's the not so cool things about becoming a copywriter? Because I think I'm pretty good at this, where I've worked with some of the top copywriters in the world, thanks to being at Stansberry. And, I was very open to it. Like, I checked my ego at the door because I would be like, hey, this is a great situation. I think we can market this. And they're like, no, it's not going to work. And because it's just a different mentality. They know what sells, and, that results in being very selective and with your promotion. But talk about maybe some of the tough things, because I know one specifically, and I mentioned it earlier briefly, is dealing with some of the editors. You could deal with very, very big egos. When it comes to writing, people love you're writing in someone else's name, and sometimes they're very passionate about it. And yep. What is some of the outside, even, talk about the editor part, but what are some of the other things? Because it is a very difficult job, though.
Yeah, absolutely. So there's lots of challenges to it. As you mentioned, working with editors and getting them behind your idea is a big challenge. I think one of the biggest challenges is just being consistent. So writing every day. A lot of copywriters, they don't have that good habit of writing. And I think a lot of people who want to be a freelance copywriter have the dream of, the freedom of it. And because they're so attracted to that freedom, but they don't have the discipline that it requires to be a good copywriter, which means writing every day. You have to do the research. You have to get on the phone with your clients and actually interview them. I see this all the time when I'm reviewing copy from writers and juniors. They send me the copy and it's just boring. It's generic. There's no story to it. I'm like, did you get on the phone and talk to them? And I'm like, no. And I think that's one of the biggest mistakes I see. It's just they're not a lot of rookies. They're not willing to go the extra mile. And it's like if you want to find those big ideas, those packages that really resonate, the really unique things that is going to separate your customer from everyone else, then you have to do the legwork, get on the phone, ask the important questions. I record all my interviews. We did this for multiple promotions we've worked on.
Of course.
But that's just the research aspect of it and just the discipline to write every single day. Most people who get into copywriting don't do those two things, and that's why they fail.
Yeah, no, that's cool. I love giving both sides of the story because it is a job you can make a lot of money on, but it's also very, very difficult. So, I have a lot of copywriters that email me all the time, that listen to this podcast, and I'm sure they're interested in this interview. And I'm hoping that my audience is interested in the interview because I'm giving, again, the backstage pass of what goes along, what happens in our business behind the scenes. But if someone wants to learn more information, Matt, how can they do that? And just, again, I know you got a lot of things going on, which is really cool with your company, but how can people learn more about you if they're interested in becoming a copywriter or if they're a current copywriter and just want to work with you?
Absolutely. Well, I send around a daily copywriting tip via email every 365 days a year. So if you want to sign up for a daily copywriting tip, I also have a bunch of bonus reports that teach you about copywriting, writing headlines, things like that. If you just go to mattrizvi.com, it's my name, Matt Rizvi. Rizvi is spelled R-I-Z like zebra, V like Victor, I.com. And then just enter your email address. I'll send you all the bonuses, and you'll get my daily copywriting tips.
All right, man. Well, great stuff. And listen, hopefully you join us again soon. And guys, definitely check out Matt's stuff on his website. And again, thanks a lot for coming on, man. I'll talk to you soon.
Yeah, absolutely, Frank. It's been an absolute blast, and it is one of many more to come.
Yeah, it's great stuff from Matt. And again, time to time, I like bringing in new guests like Matt, where I know how much you guys love when I interview stock experts and they share tons of ideas and picks. But, I also love giving you that behind the scenes access to Curzio Research and just show you what I'm really trying to accomplish here. Since I truly believe there's a dire need of original research, original ideas, not just in the financial newsletter industry, but even for hedge funds, investment managers. I mean, they're having trouble finding new ideas as well. And the way we have things set up where with this podcast, with, the network that's created through this podcast, with my current team in place, it's truly giving our subscribers access to ideas you're not going to find anyplace else, especially in more of a high-priced newsletters, which I think that's why people pay those high prices, because you're getting into a lot of ideas early, which is fantastic. And we're also showing you why we market, which I get a lot of questions, mostly from free people. Oh, why am I getting sent this and this and that? They just like free things. They want the free podcast. They want our free sites free forever. At the end of the day, I give away this free stuff so you can know exactly who we are, right? We're an open book. This is what we do. And hopefully that's going to lead to you subscribing to our services. And it has, that business models work because, we're credible and, I'm on the podcast all the time. You see the research I'm doing, going to Vancouver for 3 days, right after this podcast. I'm on the road all the time trying to find ideas. And my trip to Vancouver is more about meeting with investors, but I think you get the point. But copywriting is really important. I just want to give you a little background on it. We're not going to have tons of guests like that on, but let me know what you thought of the interview. Frank at CurzioResearch.com. I say it all the time, but I mean this podcast is about you, not about me. So again, let me know what you thought, and feel free to email me at Frank at CurzioResearch.com. Now, let's get to my educational segment. So over the past few years, I brought up some examples of how companies are able to adjust to problems or risks, especially if they can see them. Sounds kind of weird, but sometimes stuff happens. Like for our business, one of the big risks that happened that came out of left field was credit card processing, because a lot of our competitors are very aggressive, and credit card processors view our business like they would view the porn industry. There's a quick turnover, even though we don't have a quick turnover. They just, guilty by association, and they held over $1 million of our money for over a year. Think about that. We're not a big business, but now we've weathered the storm. We got through it, and that's a problem that just popped up, and I'm glad it did because, hey, really, that much money and payroll and stuff like that, you always have to be very careful, and made us budget more, made us cut back on different things. And that's how you run a business, because it's not going to be great all the time where you can spend money whenever you want. There's things that are good, things that are bad, especially during the early stage of our growth trend. That kind of threw a curveball at us. But I'm not talking about those type of problems. I'm talking about problems that you see in front of you. For example, in 2013, the largest pharmaceutical companies in the world were about to see more than $300 billion in sales from their top-selling drugs come off patent, and that was going to happen over the next 6 years. So you look at industry leaders, Merck, J&J, they're supposed to get hit the hardest because they have top-selling drugs. They're going to lose their exclusivity. If you're not familiar with what that means, or with patents last 20 years from the date of filing. And once a drug comes off patent, a generic company could basically create a copycat version, and they'll sell it for whatever, a massive, massive discount, 15 cents on a dollar, whatever. And it crushes the profits of these firms. That's the way this business operates. So if you're a prudent investor and you're looking at reading stories in 2013, you would say, wow, this, it's called the patent cliff. And they still have it now. Every year there's more and more drugs falling off file. But you would say, wow, that's a huge risk. I mean, a smart move would avoid the largest pharmaceutical stocks 2013, since they were about to see a massive decrease in sales and profits. And guys, you know that earnings drive stock prices. And if you're seeing that, these stocks are going to get hit. But from 2013 through 2018, something interesting happened. Merck and J&J did not see their stock prices plummet. In fact, the complete opposite happened. And they significantly outperformed the S&P 500 index. I'm not cherry picking here and saying it's just Merck and J&J. You can look at Pfizer, Abbott Laboratories, Eli Lilly. Look at almost any one of them. Almost all of them outperform the markets by a wide margin over the same time frame. Now, how did this happen? Well, when you're a major pharmaceutical company, you see the patent risk coming, right? They knew exactly which drugs in their pipeline are going to come off patent. They knew the exact date it was going to happen. They even know what generics are probably going to come out. They're tied to the industry. So since they saw that risk coming, to combat it, they changed their business model. They started to aggressively invest money in small and mid-cap biotech companies. If any of these drugs showed promise during the early testing phases, then, hey, they have great balance sheets and we'll just acquire these companies. And that provided a growth component for otherwise, normally slow-growing staple company. Big Pharma also started combining their signature drugs with numerous competitors. We're even seeing that in the market now. So, it may sound counterintuitive, but if Pfizer and Lipitor could show better results by combining it with, is it Crestor for Merck, whatever it is, their cholesterol-lowering drug, if they combine those, that's technically seen as a new drug. And if they go through the approval process and all the testing phases, and that shows by combining these two drugs, it lowers cholesterol even more than these two drugs do on their own, now they can get a patent on this drug. So it's almost like getting another patent on Pfizer, but on Lipitor, but it's merged with Crestor, and that's one of the ways that they were able to go around the system. They wouldn't do that from the start because they want all the profits for themselves. They only do when their profits aren't going to are going to go away, right? I mean, that's business. Big Pharma also started using their fortress balance sheets to what? Buy back stock and increase their dividends, which institutional investors, right, these major funds always love. They started pouring money into these new growth and income names. So this helped push Big Pharma stocks a lot higher. So in short, Big Pharma saw the patent cliff coming. They avoid the risk by adjusting their business models year in advance. And over the past 6 years, they significantly outperformed the markets. You can go through industry to industry. Defense industry, 2012. The legislation was about to pass, in an effort to lower the huge deficit that they're going to cut spending on all defense programs called sequestration. Talk about 1.2 trillion in federal spending cuts over a 9-year period. That's significant. And if you put it in perspective, that's basically a 20% cut in contract awards across the board. Think about that. If you cut 20% of revenue for any company, we just saw a Google report, and they usually report 20% annual growth for, I think, 14 straight quarters for ad sales. And this quarter, it declined, which was a surprise, supposed to grow a little bit more than 20%. It only grew by 15%. And look how hard the stock got now. Imagine if sales declined even more than that. So, you're looking at something that was a secular change in the industry. Now, if you were a smart investor, you'd be like, all right, I got to avoid these defense companies. I'm not going to buy Raytheon, Northrop, Lockheed, General Dynamics. Stay with me. I'm getting to the point here, guys. Yeah, because these guys are going to see a huge cut in sales and earnings. But since 2012, these guys did what the pharmaceutical companies did. Instead of investing in programs that were going to be cut, and say if those programs were manufacturing jets and tanks, because, we're not so much at war, they turned their focus onto the areas where spending was going to increase for defense. Drone manufacturing, submarines, missile defense systems, attack helicopters. Again, these areas inside defenses where spending was going to increase dramatically over the years. And just pull up an ETF for defense companies or every one of those individually. And I mean, you're looking at an ETF that's up since 2012, defense ETF, 275%. The S&P 500 is up 135%, which is amazing because the industry is supposed to get killed. Now, where am I going with all this? I just recommended a stock in our crypto intelligence newsletter. It's a crypto that the whole entire world's given up on. So many experts are saying this technology is going to be obsolete because of the way it's currently structured. But all the problems are well known by everyone, including all the crypto experts all over the world, and also including the company, which is basically now addressing all of its flaws and providing updates and revamping the whole system, which is going to remove a lot of these risks. So the thing crashed, this crypto crashed. A lot of stories are still out there, and people just read something and they believe it forever. So this cryptocurrency is down 90% since January 2018, right? And it's a very large, it's one of the main players. And it's gotten killed, and pretty much January, February, March, April, May through 2018, not 2019, negative stories come out. People are pissed off. This isn't going to work. And that's why the stock got hit. But today, people are still citing those things, even though this company is addressing them. And they're still an industry leader. It's still the major platform that people use. I'm being vague here. I don't want to give away too much because, people pay a lot of money for that newsletter, Crypto Intelligence. Now, when I look at a situation like that and look at investors, I always want to gauge sentiment when it comes to stocks, especially individual names. And it's easy to identify a hated company. Tesla's hated right now, PG&E, GE came out with good earnings, but they're hated. Wells Fargo, American Airlines, even IBM is still a hated company. Now, it doesn't mean you should run out and buy these names right away, but every one of these names is worth looking at. And it's important not to dismiss it because you're reading headlines on, the reason why Wells Fargo, people hate Wells Fargo or GE, when they were talking about the same risk for a long time. And granted, GE, I thought was mispriced, and I was wrong on this, but apparently, they hid some huge losses in the insurance business, which we didn't really know about. Its power segment was worse than they let on, which they didn't disclose. That happens. That's why we use stops. You limit damage when you're wrong. But let's look at IBM as another example. I mean, they were getting their lunch eaten by everybody. Google, Amazon, Microsoft, again, all this stuff was well known. They saw revenue declines for 22 straight quarters. It's talked about in CNBC all the time. Their server business, their core business, was barely growing, super low margin in that part of the business. And then Buffett came and bought the stock above 200, sold out at a loss. I think it was like 2, maybe 3 years later, which is crazy because Buffett's typical holding period is like 50 years. Now, when you take a closer look at IBM, at least I did, all these risks were already priced into the stock. I mean, it was trading at a single-digit PE. Everyone was talking about these risks already. And more important, IBM understood these risks. They knew that their server business sucked and they needed to have more leverage in some of the biggest growth trends like AI, data analytics, blockchain. You also saw IBM was paying a massive dividend, which I get paid to wait. It was close to 5%, and the dividend was safe based on cash flow and earnings. I saw that despite sales was slowing, it wasn't a big deal because margin and earnings were growing, which basically meant IBM was getting out of low-margin, high-cost businesses and transitioning into more service businesses, which carry super high margins. Now, why is this important? Because if you dig through most of the hated stocks, they usually have one thing in common. They're all trading at 52-week lows. Every single company, even the ones that I mentioned, trading close to that 52-week lows. And every company has hit a 52-week low at least one time during their, lots of times probably, unless you just recently IPO'd. And if you think about it that way, I mean, do you want to buy Amazon today at 2,000 or Apple at 200, right? Pretty close to all-time highs. And you know what? I think you probably do pretty well on both these investments over the next 5 years. They go buying back stock and Apple pays a nice dividend, but they're not going to make you rich. They're not going to generate the massive returns, that you want to see because, you're buying them at these super high levels. But IBM could. I mean, its market cap is 1/8 the size of Amazon and Microsoft. They're going to be one of the biggest players, if not the biggest player in a $1 trillion industry, which is hybrid cloud. GE could, if you could find evidence that most of the risk is priced in. They just came out with a good quarter. Is it a one-off? Let's see. They finally hit bottom. Look at the chart for PG&E, guys. It fell to $7 a share in January after the utility company was severely impacted by, those crazy wildfires took place in California, which they were being held responsible for. The stock got crushed. I mean, it fell into the single digits at $7. I mean, it was amazing. It was down like 80, 90%. And nobody would touch that stock in a million years, but they got cleared of any wrongdoing. They said they were going to file for bankruptcy. I don't think they're going to now. I'm not too sure. But the stock is trading at $23 right now. It's over 225% gains in just 4 months. Of course, that's if you catch the absolute bottom. But you see where I'm going with this. Because the biggest gains for you as an investor are going to come from buying super depressed stocks. Because they're trading at crazy low valuations. I know it sounds like a dangerous game since many of these are value traps. The technicals are going to be horrible. However, the one way to find a needle in the haystack or find the best hated names is to look at sentiment. Find out why the stock is down so much. And is it because of risks that everyone knows about, including the company, because they're going to address them? And can the company change its business model or adapt to new conditions or basically fix its problems? Because for PG&E, the answer was yes. For IBM, the answer was yes when the stock traded at 115. The answer was yes for a company called Aero Environment, which we nailed in Curzio Research because it came down a ton. We bought it very cheap from around 40, a little bit below that, I think. And it went to 120. We did take profits on it. It's trading at 70 now. We're still doing very well on it. But most of the risks that were being talked about in that stock, it was reflected in the stock price. It was pushed down. But people keep talking about the same risks. Just like you hear in IBM, they talk about the same risks. So we added to the portfolio. We knew a lot of it was factored in and turned out to be, a big winner, which, I love to see my subscribers make money. So the moral of the story here is if you see a hated stock as trading at a 52-week low, don't be so quick to dismiss it, even if you're a technical analyst, and just move on. Do your research. Ask yourself, why is it trading at 52-week lows? Are those factors already priced into the stock? Because if so, and if management's able to turn around operations, I mean, you could see massive gains. I'm not talking about stock coming back and going up 30, 40%. Easily 100% and even 200% plus returns are possible because these things are trading at such depressed valuations, and just, any good news is going to result in these things taking off. And this usually happens in a very short time frame, like we saw at PG&E and also Air Environment. PG&E is up from 7 to 25 in 4 months' time. Again, people are starting to pay attention now, but they wouldn't even touch it at 7. It's just something to think about. It's how I've made my living, finding some great winners by buying hated stocks near lows. I don't do it all the time. It requires a lot of research, but just don't be so quick to dismiss it because trading at a 52-week low. Don't wait for the thing to go up 30, 40% from its lows and then break technical levels, because there's a big difference between buying a stock at 7 like PG&E and getting those gains of $23 compared to buying it at 10, 11, 12 and just getting 100% returns because you waited for the technical levels to go, right? It's the difference between 300-400% gains compared to, it's almost like double, a little bit more than double the gains. Think you get the point, guys. Do your research. Don't always listen to the media, and see if a lot of those risks are priced into the stock that everybody's mentioning. And if they are, there's a good shot that you're going to see that company turn around, because the company's going to address those risks, and you can make a lot of money in an area that few people, at least a lot of people anyway, are very scared to venture in. Okay, guys, that's it for me. Before I go, I just want to ask you one quick favor. If you get a few minutes, only if you have free time, go to our iTunes page, Wall Street Unplugged, rate our podcast. I don't care how many stars you give us or the comments. Again, free to say whatever you want, but rating the podcast helps us improve the ratings. And as we go up, we draw more attention to the podcast. Not that I want more attention and, I need a pat on the back, but when we do that, it helps us get great guests on this podcast, because over the past few months, I've seen so many PR representatives reach out to us and say, hey, could you have this guy on, this guy on? Very popular people, because we're starting to show up on a lot of these as the podcast grows. And the way they do that on iTunes is if you rate the podcast. That's why every app you use comes up with a flash and says rate it and stuff like that. But only if you have time. Rate our podcast. I really appreciate you can go to iTunes, and I don't care how many stars you do in the comments. I really appreciate it if you could do that. If not, it's perfectly fine. So guys, thanks so much for listening. Love you guys. I'll see you in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.